fund.
Welcome to the Deep Dive. Today, we're looking at a huge state-directed economic shift happening in South Korea. We've got sources from the Seoul Economic Daily on everything from government funds to bank strategies and new regulations.
It's a massive realignment. We're seeing a deliberate effort to redirect the country's financial DNA, if you will.
Away from old models and into what they're calling productive finance.
Exactly. And it involves colossal amounts of capital.
All right, let's start with the biggest piece of this puzzle. The National Growth Fund, or AGWIU.
Right. The government and the Korea Development Bank, or KDB, are pushing this fund hard.
And their main target seems to be offshore wind power, right?
Yes, but what's really interesting here is the linkage. It's not just green energy for the sake of it.
It's for the AI data centers.
Precisely. The policy basically says you can't build a world-class AI hub without a massive, reliable power source to run it.
So the wind farms are actually AI infrastructure.
That's the idea. We even saw a specific example, the Haenim Solicero area.
They're looking at a combined investment there.
Yeah, an AI data center built right next to its power source, an offshore wind complex. It's a holistic approach.
But the scale of this is just staggering.
It really is. I mean, Korea has about 0.35 gigawatts of offshore wind capacity right now.
And the goal for 2030?
14.3 gigawatts.
Wow. That's more than a 40 times increase in just a few years.
You can't do that with private market funds alone. It's why this national fund is so critical.
And the fund itself is huge, around 150 trillion won. With that kind of public-backed money, what's the oversight like?
Well, the KDB is handling the day-to-day, the loan reviews and the technical stuff, but because of the size, the National Assembly requires the Financial Services Commission to report on the fund's plan and performance every single year.
Okay, so there's some accountability. But I saw a potential roadblock.
The regulatory one?
Yeah. Offshore wind isn't actually listed in the fund's current scope.
That's right. The scope covers advanced industries, minerals, K-content, but not wind power explicitly.
So how do they get around that?
They're using a ministerial meeting process to fast-track approval. It shows how urgent they feel this is.
Speed over the usual process.
Absolutely. And they're rushing to select the first symbolic project, the One Mobiza.
And that first one is important
because the fund has a mandate to direct over 40% of its investment into local regions, or CO. This first project has to prove the model works.
Okay, so let's move from the government to the private sector. KB Kookmin Bank is making a big shift.
A huge one. They're moving away from their traditional focus on real estate.
And this is all part of that productive finance push, or tsuzoya.
Exactly. The government is actively steering capital away from what it sees as speculative sectors like mortgages.
And pushing it toward things like manufacturing and tech.
You got it. And the June 27th lending regulations were the real trigger. They made it much less profitable for banks to just keep piling into real estate loans.
The numbers back that up.
They do. In just 3 months, KB's real estate loan dependency dropped a bit, while their manufacturing loans jumped up.
Is it a big enough jump to be a real change?
That's the key question. But the group-wide commitment is huge. KB Financial Group has pledged $93 trillion won by 2030 for these new sectors.
And they're changing internally, too.
That's the most telling sign. They're shrinking their real estate finance teams and growing their infrastructure departments. They're changing their DNA.
So while domestic banks are being pushed in this new direction, what about global capital? I saw SC First Bank is making a big play.
A very high-profile one. They've opened a new private banking center in Apgujeong.
For high net worth clients, so deposits over $1 billion won.
Right, and the key here is that it's the first time SC Group's global asset management model has been fully rolled out in Korea.
What's the advantage of that?
It's the global network. They can offer services a domestic bank just can't, like complex tax and education consulting for families with ties to the UK and Commonwealth countries.
And I saw they offer some pretty unique perks, like access to Liverpool FC home games.
It sounds small, but it signals that they see Korean wealth as sophisticated and globalized. It's a major vote of confidence in the market.
Okay, so this brings us to the regulations that are shaping all of this. It seems like they're easing up in some areas, but getting tougher in others.
It's a dual approach. First, the easing. For youth finance, starting next year, the age limit for check cards is being lifted. Kids under 12 can get them.
Bringing pocket money into the formal system.
Exactly. And the post-paid transportation card limit for minors is doubling to 100,000 won.
We also saw some changes for capital companies, the LA.
Yes, leveling the playing field. They can now engage in mail order business, AWO, and have more flexibility with their assets. It should increase competition.
And there's a big one for the startup world.
A really big one. The financial regulators are telling banks not to demand excessive joint liability or from founders.
So protecting innovators from personal financial ruin if a startup fails.
Right. It's designed to encourage risk-taking and re-challenges.
But in the flip side of all this innovation and risk,
Comes the hammer on security.
right,
The authorities made it crystal clear. They cited the lot card data leak as an example and warned that any security failures will be met with severe penalties. The message is, innovate, but don't you dare be insecure.
so to pull it all together, we have a massive government fund pivoting to AI and energy, major banks being pushed into productive finance, and global players moving in.
And all of it is being shaped by these dual-track regulations.
So here's the thought we want to leave you with. If all this capital is successfully redirected into these future-focused sectors, what happens to the capital left behind in the old dominant ones, like real estate?
Could this pivot create an unintended credit crunch in the traditional economy? And how will the authorities manage that? Something to keep an eye on.
Why, Journey, go.
Ay, Ashton Talboge, no kijk ze nou de.
Ja,
Ilan
kijk er een daar.
Silka an reni sum gishine, si obon chinover. Let them masekran hinyo.